Well, hi everyone, and welcome to the Buffett and Beyond Saturday Stock Analysis. And this is based on the book, or this methodology is based on the book Buffett and Beyond, second edition, published by Wiley. And we're going over GE Vernova, which is in our growth portfolio. And folks, this stock is up 76% year to date. Now, GE Vernova, you might not have heard of because it's part of the old GE. And let's get right into a few very, very interesting facts about General Electric. But remember, folks, if you want to live on this beach or walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's go over GE Vernova. Well, GE Vernova was spun off from GE, from the old General Electric, in April of 2024. So it is a new company relative to GE Vernova, but it has been around for over 100 years. Now, the company provides products, and we're talking about GE Vernova now, provides products and services that generate, transfer, orchestrate, convert, and store electricity with the aim of reducing carbon emissions. Now, management claims that about 25% of the world's electricity is generated using its technology. Folks, that's a big company, and it's all over the world. So it's not like it's just starting out in April of 2024, as it says right up here. But GE Vernova was around, or that part of GE was around since electricity was invented. Now let's look at the old GE. General Electric first began trading publicly in the late 1800s. So that's how old GE Vernova is, because it was part of the old GE. And then GE incorporated in 1889, and initial public trading around 1892. Now, in April of 2024, so just a couple of years ago, GE completed a massive restructuring because, boy, it just wasn't doing anything, which is why it was removed from the Dow Jones Industrial Average, which we'll get to in a second. But it split into independent companies with GE Aerospace, now GE, and it remained on the New York Stock Exchange, GE Vernova launching as a new entity. So here's some of your key dates. The original public IPO, initial public offering, was 1892. Now, GE Aerospace spun off April 2nd of 2024. GE Vernova, 2024. GE Healthcare, 2022. So now General Electric, the old General Electric, is now three independent companies, and GE Aerospace is the company that stands alone. And since it became incorporated, it is doing 3.5 times better than the S&P 500. So let's go on just a little bit more. And General Electric was an original component of the Dow Jones Industrial Average when it was created in 1896. So we're looking at a company that's been around for a while. And the splitting was probably the breaking up of the company was absolutely the best thing they could have done. Now, while it removed and re-added in the early years, so we're looking at in the early 1900 about 1907, it became a continuous member in 1907 and remained on the index for 122 years before being replaced by Walgreens Boots Alliance in June of 2018. So we had GE in our portfolio. Everybody had GE in their portfolios because it had so many different companies, and it was like having your own mutual fund. But it started losing market share, and we got rid of it once that clean surplus return on equity began to drop, and we didn't like that, and so we took it out of our portfolio somewhere around $33 or so, and it fell all the way below 10 at one point. So we're glad that we sold it. We cried when we sold it because it had been in our portfolio for so long. And it was replaced by Walgreens, which is not exactly breaking records on the stock exchange by any means. Okay, so let's look at GE Vernova, because that's what this video is all about, which, remember, GE Vernova and GE are in our portfolios, our growth portfolio right now. So when we look at the clean surplus ROE, and think about this as a bank, The blue line is the average large cap stock in our database, and it has a clean surplus return on equity, which is totally different than the traditional accounting ROE. So remember that. So the clean surplus ROE for the average stock, 13.5%. GE Vernova, 38.2%. Net income, 71%, while the average stock, 13%. This is net income growth. Now, this number is tainted, as we're going to see in a moment, because of when the company started, GE Vernova, in 2024. And revenue, it's doing twice as much, a little bit more than twice as high as the average stock out there. So when you look at the numbers like this in this chart, we say, okay, GE Vernova is better than the average stock out there. And when we look back here, let's come all the way down here to net income. This net income now net income is what? Net income are the earnings minus non-recurring items and future liabilities. So they have to be taken out by hand. And in other words, you have to look at all the quarterly reports and read in the subscripts about what is going on in the company, especially relative to options that are being paid to management. That costs money, because once those options are exercised by the people collecting them as part of their salary, once they sell those options back to the company, it dilutes the average price per share of you and me who own the stock or who may own the stock. So 2024, the net income only began in April of 2024, so therefore it's not a full year. Then when we get to 2025, you can see how the earnings came up, or net income came up, which is the clean surplus earnings, but it's not a true rise in there. So when we come all the way over here to net income growth, this increase of 217% is not comparing apples to apples, because 2024 was only a partial year for GE Vernova. So anyway, as we look at it, and we look at the clean surplus return on equity, and now we're going into 2027 numbers, and of course that is a guess from here, but GE Vernova, think about this, because they supply electricity, they have those gas turbine generators that are a whole power plant in themselves that can be built within a matter of months near some of those AI build-outs that need electricity, and they can't get it from the power lines because the electric companies are not generating enough electricity, and when they do, they don't have the capacity to get them to the AI build-outs or the AI data centers because of the power lines. So GE Vernova has the unique position of saying, hey, here's a generator, we can get it up and running in a matter of months, and you supply your own electricity. So that's where GE Vernova is doing very, very well. Let's look at the retention rate. It's taken just about all the money it's making and putting it back into itself in order to grow. And we went over the net income growth and the revenue growth, doing very well. Look over here. This company has no debt. Folks, this is an amazing, amazing company. And let's look at year to date. Black line down here is the S&P 500. When I did this chart on Thursday afternoon, the S&P was up less than 4%. This stock already, this year to date, first 4 months, up 76%. And when we look at the past 2.5 years, look over here. You see, this is starting in April of 2024. So it started right here, and look at the rise of this company. And then just the other day, it came out with earnings that surpassed, net income that surpassed, growth in net income that surpassed, and it just shot up 778% over the past 2.5 years, while the S&P is up 71%. Now, the S&P is doing pretty good, up 71% in 2.5 years, believe me, folks. But look at this stock. It has just rocketed straight up, and it's still performing. That's why we have this big rise in here right now. So, folks, when we pick stocks like GE Vernova, we usually don't pick stocks that are short term in nature, that have only been around a little bit and only have one product. But GE Vernova, as we saw in the beginning, is involved in 25% of the generation of electricity all over the world. So it's a company that has been around over 100 years, just not as a standalone company. So what's our goal? We want to build our wealth faster and safer with better than average stocks. And right now, GE Vernova is knocking the socks off everybody else out there, doing very, very well because it's making a lot of money. But it was based on 100 years of building up that part of the industry, or that part of General Electric. So GE Vernova, stock symbol GEV, is in our growth portfolio, doing very, very well. So folks, just remember, if you want to be on this sailboat like Jimmy Buffett once was, sailing around the world, yeah, you've got to learn how to invest even better than Warren Buffett. So folks, it's the weekend. Take your mind off the market. Get out there. Be with your family. Be with your loved ones. Take your mind off the market. And we'll see you right back here in a couple of days.